Okay. Hi, Zach.
Hello, how's it going?
Thanks. Yeah, not bad. Thanks for speaking with me today. It's and congratulations on your recent, funding of of GIA, right? I believe that's how you pronounce it, GIA.
Yep, you pronounce it Gia. I can tell you the story if you're interested in why we call it that.
Yeah, it'll be nice to hear that. But just before you get into that, right? Just a bit of introduction. Again, my name is Sheon, full called Oluwa Sheon Adeyanju, and I'm the lead editor of Mariblock, an information company, looking to inform people, Africans, and people interested in Africa about how blockchain and digital assets are solving Africa problems. Right, and we wanted to speak about a little bit about your funding, right? And so GIA, I understand, is a DeFi kind of lending platform, right? And as I tweeted, was it yesterday or 2 days ago? I'm excited about DeFi, right? And what it's DeFi lending particularly. As you probably are aware, there is this huge funding gap in Africa, and DeFi kind of opens up easier access, right? What we kind of access we've not had in any time in history to global pool of capital, right? And so I'm excited to learn more about what you do and how you're solving this problem, right? So if you could just get started by, uh, introducing yourself and how you got into crypto. I think I really asked that question, but I kind of feel it's important and the story behind GIA.
Awesome. Yeah, thank you so much for having me. It's a pleasure to meet you, Shaon, and thanks for reaching out. Hello to the Mariblock Nation. So let's see. I guess where can I begin? My career has largely been focused on expanding financial access in emerging markets. I grew up in the US. I'm from Philadelphia, so I'm not from an emerging market particularly, but I've always loved traveling and eating street food and hanging out with street vendors. And so when I started my career as an English teacher, teaching in schools in India and Ethiopia and Brazil, and when I was doing that, I would spend a lot of time with folks selling samosas on the roadside. And if you spend any time with someone running a small business in an emerging market, you see just how challenging it is to get access to fair financing. And mostly, if you went to a bank in India and say, "Why don't you give a loan to that guy selling samosas on the roadside?" They would say, "Well, not much data about them. I don't know how many samosas they sell, and it's probably not worth my time because I probably only need a couple $100." And that's the general challenge I've been working on my career to solve. And I did that first working with traditional community microfinance groups and sort of the Grameen Bank model. And then more recently at a fintech lending company called Tala, which is one of the first mobile lending apps. But what led me to start GIA was this idea of providing more access to fair, flexible financing in a way that I think hasn't been done yet. And I think, as you called out, you can use blockchain to help with that in a number of ways. The two main ways we do it at GIA is one, we use blockchain as a means of representing ownership, and so we provide our borrowers with token rewards. They actually become owners of the protocol and can build wealth beyond just accessing financing. And two, we use it as a capital aggregation method, so unlocking investment opportunities to folks around the globe so they can invest in emerging markets lending and lowering the cost of capital for these small businesses. So that's me, and that's what we're doing at GIA.
All right, great. You've mentioned two important things, right? And I was just working at Tala, right? And I think ownership around the ownership for for your customer, but through your token, right? I'd like to talk about that as well. But let's talk about your transition from Tala to GIA, right? You worked in it's kind of in the same vertical, right? Lending. What were the problems you identified at Tala, right? And I believe that definitely played a huge role in you deciding to work on GIA, what were the problems that you experienced, and were there like things that could not be solved, or that you felt blockchain was that blockchain was more a better position to solve, right? That could not be solved through your traditional means.
Well, I think Tala has done a lot of great things, so I don't want this to sound like we're doing something that Tala couldn't do, or that this is a rejection of that model. But what Tala did really well that really no company had figured out how to do before was serve sort of this previously underserved MSME lower segment and consumers who'd been locked out of credit with a flexible product that would scale really quickly. Right, it was a really revolutionary concept when Tala launched, as the first mobile lending app. I mean, now there are hundreds of these around the world. Tala really created that category. And the idea, folks who don't know, is let's say you have 3 billion people in the world without credit scores. Most of them now have phones, and their phone has all this data about you. So we came up with a simple app which would use your phone data to underwrite you and provide access to loans as small as $10 that then they could grow up from. One thing that I decided I wanted to spend the next phase of my career on was specifically focusing on MSME and micro business financing. I think the reality is a lot of loans from mobile lending apps end up being used for consumer use cases. I mean, they're completely unsecured and use case unrestricted, which I think is a good thing. People get flexibility, but that means that you have to charge a higher price for that because they're riskier when they're not secured by anything. And so it's one thing for maybe a consumer to sign up for a payday loan so that they can pay their rent at the end of the month. But it's another if you're a small business and you should have access to more affordable financing because you're running a business, but because no bank will give you access, you end up having to take a loan from a consumer lending app. And I think the market asymmetry, which is not happening, is there's all this business data these businesses have, which are just sort of not being used by anyone to underwrite. And if you only use mobile data, you're missing out on all of that. So I knew one thing I wanted to do is move from sort of consumer lending to MSME financing and find a way to serve true businesses with a better value proposition. On that, we're not necessarily using much with blockchain. That's actually just good old finding out more about businesses and using it to underwrite. And we partner with local companies who have a network of underserved MSMEs who might have a need for financing. And we use proprietary data from those partners to underwrite. An example, in Kenya, we provide inventory financing to medical clinics. And we partner with a company called Elara Health, which has a network of these medical clinics and a ton of data about the clinics. And no one's using that data to underwrite right now. So we partner with Elara to use that data to underwrite them and allow those clinics to take to buy medicines on credit. And that's great because Elara doesn't necessarily want to be a lender. They're a healthcare service provider. And the clinics all want financing because they buy their medicines on Monday, but the patients don't come in until Friday, and we don't pay them for another few weeks. And then we get these new customers. So that was step one. The blockchain element, which is different from what I saw being done in consumer fintech lending, really goes actually back to the principles. Let's go even back before fintech, just the principles of community finance. So for most of human history, the way people have saved and borrowed and accessed finance together is in groups and communities. Here in West Africa right now, you're probably familiar with susus, and in East Africa, they're called chamas. And I'm talking to you from the Philippines, where here they're called paluagans. But the idea is that people save and borrow in groups together. And that's because that's who they know and that's who's got each other's back. The thing about those groups that's really beautiful is everyone sort of has shared ownership. So when people take out money and they repay, then everyone benefits. But those groups can't really scale beyond small communities. I mean, for one, they just break down due to lack of trust and lack of knowing who's who. And two, they only get access to the capital that's already in that community, which isn't great if you're in a community with low resources to begin with. And so in absence of that, that's where like foreign lenders have to come in and provide the capital and do so at higher rates, and also do so in a way where the ownership upside is all happening somewhere else. I mean, if you look at most foreign-owned fintech lending apps, they're owned mostly by venture capitalists sitting in California, thousands of miles away from the borrowers they're serving. And the way that people traditionally, the way you build wealth is not just through like running your business on a daily basis or getting wages, it's through owning something. I mean, in the US, the way that people have traditionally built wealth, actually most of the world, has been real estate. You buy some land and then that turns into your wealth accruing asset. Or if you're in the startup world, you own equity in a startup. And at Tala, I would have borrowers in Kenya sometimes ask, they'd say, hey, in my SACCO is a savings and credit cooperative in Kenya. And they'd say in my SACCO, I take loans and then I repay and I put my money in and I get shares. And as the SACCO does better, I get dividends at the end of the year. And I've been taking your guys' loans for the last year. So can I have shares? I want a piece of this. I want ownership pie. I want a piece of the upside. And there's no great way for a US-based company to somehow distribute fractional shares around the globe. And even if you could, like what would someone sitting in Nairobi do with like a piece of paper that's kind of illiquid to sort of represent some fractional ownership of something some far away? But what's really powerful of the concept of a token, this idea that if you can represent ownership in a token that has claim to a stream of revenues happening on chain, then you can really easily distribute it, and it can be, you can see this new fair ownership distribution model, and it's also liquid, right? And so what we do at Gia is this idea that when a borrower repays a loan, they're creating value, and they deserve to be compensated as part of that ownership upside of that, right? And so when they repay, they get these token rewards, and of course they can, if they want to just immediately liquidate it because they don't really care about the ownership upside, sure, they can just trade it in for shillings. They could also use it within the ecosystem to unlock lower interest rates or to bring in new borrowers and sort of stake those tokens on new borrowers repaying. But if they just hold on to it, that's sort of the same equivalent as like me going and buying some Tesla shares because I think Tesla's going to do well. And then when Tesla does better in 10 years, I get to sell it and I have more money now. And that's the general idea. So those are two things that I think are different from the consumer fintechs that I worked at in the past.
All right, great. So your token serves as an incentive mechanism, to basically get people more involved, like SMEs, incentivize them to build good sort of credit rating, because of what that could like provide for them to them in future. I saw, when we're on our story, I think we mentioned something around that they could access lower credit rates or better terms, basically altogether, as they accumulate this token. I mean, we'll see how that goes, right, and how that works out. But just like to talk a little bit about the model, right, of this community. I'm assuming that does this fund, right, because you mentioned earlier the way, and I think what you're describing sounds pretty much like what we have right here in Nigeria. I'm based in Lagos, Nigeria, called co-ops, right? So we have like cooperative societies, and they pool resources together, and kind of find a way to benefit every member. How different is this model? And if that is pretty much the same, why do you have to use blockchain? And one of the questions we like asking at Mariblock is why blockchain, right? And it's important for us to like make that part very clear to people, because that's a question that a lot of people ask. Yeah, they probably will tell you, I mean, these things exist in the traditional world without blockchain. So what does blockchain do better? Does that make sense?
Yeah. What I believe the best way to design technology products is not to try to create something revolutionary and crazy and new. I mean, a lot of products are like brand new ideas, like the automobile at its time was a revolutionary idea compared to the horse, but it was solving the same problem of just moving people from point A to point B. And so what we're trying to do using blockchain to represent a cooperative model of ownership is should not be fundamentally different than the way people save and borrow in cooperatives. It's just let them do it better. Should let them do it more efficiently and let them do it on a larger scale. Right now, most cooperatives that you're referring to in Nigeria, they probably do work pretty well for some use case. My guess is they are sort of capped in how many folks they can serve, either because they don't have enough capital to serve more than the people in their community, which I don't know, it could be 100 people, it could be 1,000 people, it could even be 10,000 people, but it's probably not 100 million people around the world. You also have challenges, even cooperatives that are run and local levels have a bunch of what you'd call like central party manager risk. I mean, I think we've all probably heard stories of a Susu or a Chama or just a small group, which ends up sort of being a bit of a scam. And like the person who is running it just like runs away with the money. And that sucks. Like people should not have their money taken away by bad actors. Now, crypto has had a lot of that too. That's really, really bad. I mean, like FTX and Terra Luna, and I mean, crypto is not like immune from the diseases of human nature. And if people are going to run scams in their susus, they're going to run scams in crypto. And I think, unfortunately, that's what a lot of, I mean, particularly in Africa, I think crypto is just associated with the word scam for a lot of people who haven't heard of it, because that's all it's been for a lot of people. And that's really a shame. And so I don't think we want to come out and like associate our company with pure crypto because it has a bad connotation. But what we are using is blockchain to make this cooperative model scale in a safer way.
All right, great. And I'll ask this: our reporter who wrote the story it didn't make the final cut, right? You didn't see it in what we published, but he had this ton of questions, right? Is what we don't know. So we kind of have that area in that part of our coverage, and one of the questions he had there was, we don't know if GR system, uses smart contracts or whatever it is to like reduce this counterparty risk, right? And he had this ton of questions. I was like, if you have this many questions, we should probably be speaking with them to find out.
Yeah.
So do you want to do that?
Sure. So what we do right now, I mean, the smart contracts that exist right now are for our on-chain liquidity pool. So what happens is we've sort of launched a pool on a protocol called Huma Finance, it's a DeFi lending protocol, which is similar to, I mean, maybe your listeners have heard of Goldfinch or Maple or Centrifuge. It's another lending protocol which lets investors from around the globe park their funds and earn yield. So there's smart contracts there, which sort of govern that investment pool. What is on the roadmap, what has not happened yet, is really making every single one of our individual loans have its own smart contract. I mean, I think what's really cool to think about is imagine a world where, well, I guess the way I sort of imagine the future of finance, especially as we think about our like scary AI future, is one where everyone who has some money could just close their eyes and be like, here, take my money and just get me a return for it. And everyone who's running a business and has a need for money, like a legitimate need, could just go and get that money. Like, hey, I'm gonna go put this money to work and give it back to you. That's like the end state we're trying to get to. There are some interim steps on the way to getting there. So like right now, for example, when someone with this first pioneer pool we've launched, so when a lender deposits money, then the money gets off-ramped by GIA, and GIA Kenya then lends that to a small business, say a medical clinic in Nairobi. But what's coming up in the roadmap, so later this year, which we're really excited about, is that when that medical clinic hits, yes, I want to buy my medicines and finance my inventory with GIA, the money then gets directly off-ramped from that on-chain pool directly to that medical clinic. And that when the medical clinic repays and they re-on-ramp their Kenyan shillings, it gets converted to USDC. And it can be abstracted, so the borrower doesn't know it, but in the back end, what's happening is they're creating their on-chain credit score. And what you can do from this in the future is begin to layer on more and more crypto native applications for that medical clinic. So today, why does a clinic need money in shillings? Well, because they can't do anything with USDC. They need to buy their medicines. But the reason why people are not using crypto in the mainstream way in Kenya is not because like crypto wallets don't exist. Like there's lots of people could go get them if they wanted them. It's the reason why people aren't using them is because they haven't really met a need today. And I almost think of it, if you compare the rise of mobile wallets and mobile financial services, there were plenty of mobile wallets, and that technology existed for a long time. But what drove the adoption of it around the world was really mobile lending apps, because that's what people need. People don't just need like another way to pay. I can pay using cash, but what people needed was liquidity. And so, I mean, I'm sitting here in the Philippines, and I remember when we launched Tala in the Philippines, no one used mobile wallets. There was this app called Coins here, which is like the mobile wallet, and no one used it. Then we launched Tala, and all of a sudden, everyone started using Coins because they needed a Coins wallet to get their Tala loan. I think of that as a parallel situation of what's happening with GIA. We're meeting borrowers where they are. We're meeting small business owners where what they need today is liquidity. We're providing that liquidity from on-chain pools. When they repay, they're probably going to get what's, my guess is their first crypto asset is a GIA token. And that sort of represents ownership for them. It also unlocks lower interest rates and higher loan amounts and other credit rewards. From there, from that foundation, we can begin to sort of introduce the other great use cases that blockchain could have in their life. So for example, I mean, you're sitting in Nigeria and everyone knows that the Naira is not a very strong performing currency, and most people would rather keep their money in a US dollar stablecoin, which would, you know, not be as volatile as the Naira. And so once we've already introduced them to the GIA token, maybe the next thing we do is introduce them to stablecoins so they can avoid currency risk. From there, we begin to be able to sort of on-ramp them onto the other future sort of great products and and services that Web3 and the blockchain allow. So I guess what I'd say is where we are today is using blockchain in some very discrete ways for aggregating liquidity and for dispersing it. But in the future, I think there's going to be much more to come.
All right, yeah, that makes sense, right? Thank you for clarifying that. I always understand that you cannot build it all out in one day. So yeah, I look forward to following your story. And just one other question that I have is how much, I understand that you're currently live in Kenya and the Philippines, right? Currently, how much in terms of loans have you disbursed? What's kind of, and what's the average ticket size?
Yeah, so we are currently serving several hundred borrowers. Won't put an exact number out there because it's going to be fluctuating, and hopefully it's going to be a bigger number by the time folks listen to this, but several hundred borrowers and less than $1 million originated. The average loan size that people are working with right now is around $500. That's what people are taking as, typically it's a 1-month inventory financing product. Some of them are longer, some are 3 months, a few are as long as 6 months. Some are shorter because people just want 2 weeks and they don't want to be on the hook for paying for more than that. But we are just getting started there and excited to come back on in a few months if you'll have me again and share some bigger milestones.
All right, yeah, it'll be great to speak to you in a few months. I mean, we again, DeFi lending, it's a big narrative for us at Mariblock that we are tracking because we, as I shared last year. After Pizisha, I'm sure you know Pizisha. You probably have heard about them.
Yeah, for sure.
Yeah, so it was exciting to see the Cardano builder that's being built Output Global, invest or participate in that round. And it kind of just like, yes, this is what we've been talking about. There is this huge funding gap, and the current systems of like capital allocation and pulling together takes a lot of work. There's a lot of just because of the regulatory requirements that each of those companies. So now if you can have like a decentralized protocol that can make it faster, there's a lot of opportunities there. And that makes me want to ask you, what is the average interest rate you charge on on these loans that you give out?
So our borrowers are basically paying between 2 and 6% per month. Obviously, depending on the context you're looking at that, it can feel like a great deal or it can feel like a high amount. The reality is the borrowers we're serving, their other option is usually going to a consumer fintech app where they're probably going to be paying about 15% in a month. So in pretty much all cases, we're cutting their cost of capital by a third. We're excited to keep that as low as we can.
Yeah, that makes sense. I I'm aware of the interest rate regime around there. It's generally around the mid to high double digit rates, like from your 15% upward. Even when you go to the banks, right? I doubt if there are any banks. I'm sure there are very few that offer interest rates that are like in the single digits, right? But the question, that introduces a huge concern, right? And that is what I would call currency mismatch, right? Those people you're giving loans to trade in local currency, their business exists in Kenya and are susceptible to the realities around shillings. And when you would find this problem maybe even like become bigger if you ever expand to markets like Nigeria, right? And Ghana, for example, last year experienced probably the worst depreciation in currency globally, right? And the problem with that is I've gotten a loan in USD, right? Mm-hmm. And then the value of my local currency depreciates. That exposes me to potential pitfalls. How do you look at this problem and solve it?
Yeah, great question. I mean, we basically have to absorb the FX risk in some way, right? Either the lender is going to take it, and the lender's generally lending in USD. So when we take that, we're on the hook for providing a USD return. We don't want to make our borrowers susceptible to that. You don't want to give them a loan in dollars when they, of course, have no way to hedge it. So we are sort of responsible for hedging the FX risk. Part of it, of course, is we price it into the return we're able to provide investors. If we imagine we were going to be able to provide a 15% return, but we expect that we're going to lose 5% on currency, then you can only give a 10% return. And if part of it gets priced into the borrower. So if we think we could be able to provide you with a 2% rate, but we expect FX to, jump 5%, then you're going to have to pay a higher amount. In the long term, this is a challenge for any business doing cross-country, cross-border finance. In the long term, we'd like to be able to protect against that with some hedges, with currency swaps or non-deliverable forwards. But those are very, very expensive. I mean, even the last company where I worked, where we did billions of dollars of loans across borders, it's still almost too expensive to do a US dollar, Kenyan shilling currency swap. Hopefully on chain, some of those costs can come down. And it is really exciting hearing about different projects which are working to develop sort of local currency stablecoin, like a Kenyan shilling stablecoin, and providing some liquidity for a currency swap there. But the reality is, I think it's very early days on that sort of stuff. And so we're hopeful, but at the moment this is a challenge for any business which is dealing across borders.
All right, beautiful. And just to understanding, just to clarify, what you've just said is that when I borrow, so I own a business in Kenya, right? And I borrow, say, $5,000. It's going to be at a fixed interest rate. A fixed exchange rate, and that is at the rates that's the rate I would repay.
That's right. You as a borrower don't know, and you don't have to think about the exchange rate. You just are getting. Oh, and the reality is, for our user segment, they don't even really want to think that much in percentages. They just want to know, how much are you giving me and how much am I paying back? For the most part, they think, okay, I'm getting 1,000 shillings today, and I'm going to pay back whatever it is, 1,050 shillings in 3 weeks. Got it. Just keep it simple.
Right.
And then the lenders, right? They just see, got it. I'm expecting a 10 to 12% return based on the performance here, and that's what I'm going to get.
Right. That makes sense. And what you're saying is, so your customers get paid in their local currency, so they don't have to think about currency conversion and all of that, right? But I'm curious to see how, in terms of, I think your model probably requires high turnover rate. What is the longest time of you give currently, long term?
Yeah, so the longest one we have is 6 months. The typical tenor is between 1 and 3 months. And that just sort of maps the needs of a business, right? For the most part, our businesses are buying inventory and turning that inventory over. It could be in a week, it could be in a month. And and they want to repay and then get access to a higher funding amount so they can keep growing their business.
Right. Yeah. Great. And when but I won't believe that the guys that the lenders that put money into the pool, right, kind of leave it for longer period than that, right? So you kind of are able to turn it over a few times. Do you have like a minimum requirement, or you have to lock this in for a certain amount of time?
For this first Pioneer Fund pool, we've basically just taken that as a 1-year pool. And so we are fortunate to have investors who have the patience to park their money for a year and are excited to get the return on it at the end. Of course, it pays out interest yields over the course of the year. So just like any investment, the way most investments pay out some amount. But it's tough in this DeFi world. A lot of folks, maybe like the DeFi degen model, is expecting to be sort of like take their money from here and throw it in there and move it around every couple of days and swap tokens. And I would say good for those folks. That's probably not our target LP. We are interested in providing sustainable yields based on real world returns. And for someone chasing like triple digit returns and making like 20% in a day, I mean, Gia is just not going to provide that, because selling vegetables in Nairobi doesn't provide that. And that's what we're back.
Right. I think we're going to get to that point in DeFi, right, where I think stability is what we need in the space. And, this hunger for sky high returns are going to die down, because the idea in a story that I wrote something last year around the lunar crash, right? And it was around the same time that Cello piloted a DeFi loan program in Kenya as well, kind of packaged in form of a salary advance, right? I think the average interest rate on that was about 8%, and it struck me. This was in the early days of Mariblock, and those were like, yes, this is what DeFi is about. It is about decentralizing access. It's about giving agency to those who don't have it currently, who are locked into an expensive system, right? And it was interesting to for that to happen around the time, where literally what caused the crash was greed, right? People just trying to rehypothecate funds and all of that. And I look forward to that future. I hope we get there, because when we do get there, then a lot of opportunities and potentials will be unlocked globally, especially in the global south. Right. And just before I let you go, please, I'd like to talk about investments, right? You raised, I believe, $4.3 million, right? How was the conversation especially given the period we're in right now? You raised that kind of money.
Yeah.
What was it like?
Well, I think, it's certainly for any founder out there trying to raise right now, it's a hard time for sure, because we're going through a difficult moment in our global economy. We were able to raise $4.3 million, I think, because we found the right mix of investors who shared our mission. They want to build something that sort of reimagines the global economy and does so in a way that helps people, but also provides these, sane, sustainable returns so that we can build a more sustainable ownership economy. I mean, think about what you just described. Like, our investors, they sort of, I'd say it's the intersection of like fintech and crypto. So you had some people who traditionally done like Web 2 fintech deals, and some people maybe traditionally done like consumer Web 3 deals. And I think both of those investor types are looking for some of what the other has, right? Like the Web 2 fintech investors are like, we need to do something beyond what we're doing. We need to start using the blockchain to, make our industry more innovative, and bringing real world assets on chain. That's a really exciting way to do it. At the same time, Web 3 investors are sitting there being like, we got all this technology, but we don't have much to show for it. We don't have like many practical real world use cases. And we're never going to get to, everyone's like, well, when are we going to get the next billion users on Ethereum? Well, you're not going to get there just like creating like beautiful technology products that only some like degens or like hardcore engineers can use. And so this is the kind of application that brings people on chain. And I think that's what the crypto investors are really excited about. So I'd say, I'm not sure if the audience of Mariblock is aspiring entrepreneurs who are looking to raise. I think a really important piece is being able to tell the story and paint the future that investors want to be a part of. And especially if you can find a vision of the future that probably is like commonly shared. I think we all believe that the financial system should be fairer and function in a more efficient way than it does today. And there's no reason that someone running a profitable business, employing a bunch of people in Kenya, shouldn't have access to financing. If someone who's running just the same kind of business and employing the same amount of people in America has access to financing, like surely that doesn't make sense. And we just think we've stumbled upon a solution to that very real problem.
Right. Yeah, that makes total sense. And was this kind of a funding round that was oversubscribed, or you just had to you had a soft cap that you just we're good here?
No, it actually was oversubscribed in that we did. We began conversations with a bunch of different investors, and we had planned to take $4 million. And when after all the conversations, I think we erred on the side of inclusivity. We wanted to, a lot of the folks who were interested in participating, we thought they could be really helpful because they could either open doors to important conversations, or they just had something to provide in terms of their own strategic experience. I mean, we have like angel investors who have run some of the most successful fintech lending companies. And we have venture capital investors who are connected to, the right folks in different markets. And so we decided to take 4.3 instead of 4.
Right, that makes absolute sense. And just let me delve back a little bit to the currency mismatch problem that I mentioned. I was going to ask, there is this kind of traditional, the way this problem is solved in the traditional finance space is that because traditional finance gets loans or credit in dollars or foreign currency as well. And one of the things they do is they do not spend the, so for example, I as a company say I get a loan of $10,000, right? And I understand the risk associated with Naira. So what I do is I take the $10,000 to a bank or some sort of financier, deposit it and get some sort of fund against that, right, in my local currency. So that way I don't have to worry too much about repay. Is that a model that you employ as well as part of your risk management?
Oh, interesting. Well, we got our investment in dollars, which thankfully is a stable currency for now. We park our company's capital in the U.S. bank account, and some of it's earning yields in a treasury account, but we're not trying to do anything risky with that. That's really dedicated for the operation and growth of the GIA platform. So it's different than getting a loan. It's equity funding, not debt funding.
All right, great. Yeah, and I'm last one that I wanted to ask was the funding you used. You secured, because I remember I read that I think other than the 4.3 million equity funding, you secured a 1 million funding for liquidity. That's separate for the 4.3 million.
Yeah, so that's separate. That's right. That's separate. So the 4.3 is just equity funding for GIA's operations, and now what we've raised separately is funding for our actual lending portfolios, which is going in the term of that's what I describe as on-chain liquidity. More traditionally, you can just think of that as debt funding, right? That's the money we're using to lend out. We're sort of taking it in chunks. So we just launched our first pool. It's called the Pioneer Fund pool on a protocol called Huma Finance, HUMA.finance. And that quickly filled up. And we have commitments for future pools as well. We're really hoping to be as inclusive as we can in these pools, and we're happy to take funding from folks who are not just the committed investors, but also new people. And so there's actually an interested investor fund. If you go to gia.xyz, which is our website, and you just click invest with GIA, you can fill out a short little survey. And that's a way for us to then get in touch with you and see if we can include you in the next pool.
Right. So do I have to be an accredited investor to qualify?
Yes, for this one, we can only take funds from accredited investors. That's obviously unfortunate for folks who can't participate. We want to be as inclusive as possible, but at this stage, we really just want to be as compliant. We want to be compliant. I want to make sure we're doing everything by the book. But we're excited to eventually roll out more opportunities.
Right. I mean, that makes a lot of sense. Look, thank you so much for your time. I don't know if there's anything you'd like to add so that you can get back to your conference.
No, that's it's been great talking to you. I do want to share. I remember when you started the conversation, I was going to tell you why we're called GIA, which I feel like is just a fun story that I like to end with, since companies have all kinds of names, and you're like, why is it called this company? I don't know. What's that name mean? What's a goldfinch? For us, the reason we're called GIA is because it's sort of an homage to our multicultural global team. So in Chinese, GIA is pronounced Jia in Chinese, and my co-founder, she's from China, and it means home or family, and we think of that's like the central financial unit. In Hindi, GIA means heart. I think this is building banking with a heart, and I lived in India for a long time, so we got that. And then in Swahili, Njia means road or path, and Kenya is our first market, so it's important that we have a Swahili name. And we think of this as building the road or path to financial independence. So I don't know if it means anything in Igbo or Hausa, but when we come to Nigeria, maybe you can help us with our branding.
Right. I mean, that sounds very inclusive, and that's a word you've used a lot in this conversation. Yeah, it's interesting to hear that story. Thanks for sharing it.
For sure. Thank you so much for your time. I really appreciate you having me. And my DMs are open, so anyone who wants to get in touch, I welcome you at zmarks215 is my Twitter handle.
Right. Yeah, I look forward to following your work, and I wish you all the best with GIA. I hope you plan to expand to other parts of West Africa.
Awesome.
Other parts of Africa.
Cool. I can't wait to come out there. We're running a small pilot in Ghana right now, but that's all we got going. I'll need your strength and courage and insider connections before we do anything in Nigeria.
Right, I can imagine. But yeah, I look forward to following. Please keep us updated. We are here to tell stories of what companies like you are doing, and share it with our audience, both locally and across the world. Right.
Awesome. Thank you so much.
Enjoy. Yeah. Bye.
Perfect.